Welcome. This is Unfiltered Forex here for the weekly forecast for next week, the week beginning Monday, July 3rd, ending on Friday, July 7th. Yeah, ending on Friday, July 7th. So it's a new month, it's a new half of the year. This is the first this is the first week of the second half of the year, and half the year is gone. We're expecting now to begin Q3 and Q4 remaining only. So let's begin the forecast for this week. So on Monday, it's a holiday. Yeah, when it's a holiday in Canada, it's a holiday in the US, Independence Day. There's also ISM Manufacturing PMI being released. Um, so let me say something about this PMI. This Purchasing Managers Index, released by the ISM Institute of Supply Management. It's a survey of the purchasing managers. It's a survey of purchasing managers in the manufacturing sector of how they feel about the economy. Okay, if you don't know about that, what that is, I'll discuss it later in the week. Don't worry, I will discuss it later in the week. So it's being released on Monday. It's very important. The ISM manufacturing PMI is very important for two things. Generally, the PMI is very important for two things: prices and employment. There are two indices in the PMIs. Two indices in the PMIs, one being prices, the other one being the employment index. There are many other indices in the PMI, but these are the main ones: the price index and the employment index. They are leading indicators of other leading indicators of the economy and leading indicators of other, now the main prices and employment readings. That's why the ISM manufacturing PMIs are very important, being released on Monday. So I'll talk a bit about that when I'm talking about the jobs reports. So on Tuesday, still a holiday in the US, uh, RBA interest rate decision, Reserve Bank of Australia interest rate decision. So what happens with this RBA rate decision is you don't you don't go deep into analyzing it. You don't go deep into analyzing the monetary policy decisions. You don't do that. You just go to the chart, look at it, look at the. I prefer to look at the Australian dollar versus US dollar chart. And then if there's a setup, I go with it. The By the time the rate hike comes, that's when I'm making my entry a minute prior to the release, and the move is usually very clean. I have had no problems trading it for the long I have traded this release. It's usually that simple. You don't even know if you don't even have to know if they're going to hike or not. You don't even have to know what the monetary policy stance will be. You just go there, look for a setup. They are usually very clean. You see it, you get in profits, and it's usually in the morning, say for 30 a.m. GMT. It's usually in the morning, so just make your profit and end your day there. Wait for other releases. So on Wednesday, July 5th, we get the FOMC meeting minutes. Those are the minutes for the June meeting, which happened, I think, on 14th June. Yeah. Uh, yeah, I think it was 13th or 14th. Yeah. That's when there was a meeting. Then the minutes are coming out. Going to see what the Fed policymakers discussed, whether there were guys who voted for a rate hike, whether there are guys who voted for more rate hikes than other members. So yeah, the FOMC meeting minutes are important for just looking at the general sentiment of policymakers. That's the importance of those meetings, those minutes. Thursday, July 6th, we are getting the ADP non-farm employment change. I mean, uh-huh. ADP non-farm employment change. Uh, this one, this one is very important because it's like a small NFP report. This ADP is a private company. They do these things for usually do these things for private. They collect data for companies, hiring stuff, blah blah blah. I'm going to explain that in a separate video later in the week. But for now, just understand this is a very important report to watch out for. And another one, initial jobless claims, you can ignore this one for now. This one you can ignore it because it's not important for this week. The the last jobless claims data that is priced into the NFPs, I think it was the one we got last week, and this was the reading, the previous reading, 239K. You can see there. So the other one is the services PMI. Okay, so quick, quick, quick word to note here. You can see there are two PMIs here. This non-manufacturing PMI is also the services PMI. The services sector is also called the non-manufacturing sector. The difference between these two reports is that this one is released by the ISM and this one is released by the, what are they called? Huh. So, yes, no. Let's just look at the name. Released by, I'm not sure. And let me remember. Market, no, market. Uh, PMI releases by S&P Global. Yeah, yeah. This one is this first PMI here is released by the S&P Global, and this one is released by the ISM. This ISM one is the one that's most important because uh, these are the guys running the country. Institute of Supply Managers, Supply Management, yeah. And this PMI is a Purchasing Managers Index. This is usually the more accurate and the more reliable index to follow. So yeah, this one, this PMI, just as like I said about this one on Monday, the ISM manufacturing PMI, the two main indices that are mostly watched in this one is the prices and the employment index. So yeah, we're going to look for that. This number generally is supposed to indicate the overall health of the economy. Okay, the overall sentiments about the health of the economy. So yeah, this is a sentiment reading. That's why it's very important. Okay, the next one, JOLTS, job openings. May this is a measure of labor demand. It's usually very important when it comes to determining how many job openings are there. The number of job openings, of course, serves as a clear indication of demand for labor. Many job openings means there's high demand for labor. Low job openings means low demand for labor. So yeah, you can see here job openings number had fell quite a bit, and now 9 million, and now back at 10 million. And even this year, the forecast is currently blank. I think they'll update that within the week. But yeah, that's what this thing is about. This job openings data, it's a measure of labor demand. More openings means more labor is needed. So yeah, crudely you can ignore this one. So that's it for Thursday. These are all very important, very major releases to look out for. It's going to usually, as you know, okay, if you don't know now, let me tell you. Usually, these events are spread out within the week. Like on Monday, you see ISM manufacturing PMI. Then on Tuesday and Wednesday, that's when you get the job openings and the PMIs maybe on Wednesday, and then The jobless claims on Thursday. The ADP non-farm employment sometimes it's come on Wednesday, sometimes it's on Thursday. Today you can see, this week you can see it's on Thursday, and so are all the other major ones on Thursday. Then on Friday, this is when you get the non-farm payrolls. This is a very important one because this is the jobs number. This is what indicates strength of the labor market of the U.S. economy. You can see here we're expecting the number to be 200K, which is a very small estimate according to me. Yeah, they usually do this most of the time. They release a small estimate, then the actual number comes out very high, and then the market reaction is very volatile, and then it's just a whole mix of things because other than this non-farm payrolls number, the unemployment rate is also something very important. 3.7% is the current estimate, and you can see here the previous one was also 3.7%, significant a, a slight increase from the where the unemployment rate has stagnated for a while. Why is this thing loading so slowly? So yeah, okay. Before that one finishes, a bit about the unemployment rate. This is what's most watched. This is what is the most awaited number because the Fed, on deciding if to loosen or tighten monetary policy, they did say they they think that inflation is being made hard to fight because of a strong labor market, and that's why this unemployment rate is very important. Should the unemployment rate take up to 4%, 4.2%, that may be something to tell the Fed that it's now time to think about pausing rates and waiting for the full effect of rate hikes to take place on to take the effect to have an effect on inflation. So this unemployment rate is very important to watch. A higher unemployment rate means the Fed is less likely to hike. A lower unemployment rate means the Fed is more likely to deliver another hike. This is where now I'd like to switch to the CME Fed Watch tool. This is a very important tool to watch out for, to look out for. Currently, these are the main probabilities we are concerning ourselves with. Yeah, these are the main probabilities we are concerning ourselves with. Yeah, these ones. Because this is for the July meeting, 26th July. This is the meeting date, the next meeting, the meeting that's coming this month. So, yeah, that's what the market is expecting. The market is closely watching, and these probabilities will shift depending on how incoming data will be looking like. Yeah, so I'll release another video or two in the week describing these events and how I expect them to affect the market. And of course, after Friday is over, I will release a separate video talking about how now the post NFP analysis. Yeah. Other than that, now going to the charts. Let me not go to the charts first. This data, because I trade the news, this data, if you want it to be well with you, you are only trading on 2 days this week. Personally, I'll only trade on 2 days this week. Tuesday and on Friday. I'm trading on Tuesday this RBA interest rate decision, and on Friday the non-farm payrolls itself. Yeah, I do trade this news, and very, it's a very, I could say, profitable venture, very organized style of doing things because in as much as I'm only trading on these 2 days, I have to stay in the market from Monday all the way to Friday to analyze these major releases, these small releases that are coming out to do with the jobs numbers, and then so that come Friday, I have a I have a bias that I know is almost foolproof, that I know is almost 100% accurate, that even if I get in, manage my risk well, if I lose, I'll be comfortable taking that loss because I did put in all the work I was supposed to put in. So, yeah, but of course, the probability of losing is again usually low. And even when you lose, you're only losing little money. Yeah. So I'll on trade on Friday and on Tuesday. So this is when now I'd like to move to the trading view. Wait, wait. Yep. No, no. Wait. Yep. Now this is where we go to this trading view chart. Okay, so first let me look at this dollar index and see what I expect. Yeah, if you watched the previous video, you saw this is what I had on the dollar index. This is what I think price will do come next week. That it's likely that this high might be refreshed, or maybe this low might be broken and make a retest and continue lower. But looking on, let's look at the forward time frame. Hmm. Yeah, looking at the forward time frame, you can see price when it reached here. This is where the trend kind of shifted. I was expecting the decline to continue all the way down to these 100 levels, but mm, fortunately or unfortunately, Jerome Powell came somewhere here on Wednesday and said and revived the hopes for rate hikes. He said, "Hey, we're not done hiking rates. We will definitely hike some a little more or a lot more if necessary." And he's just been very hawkish in these past 2 weeks. So that's why you can see there was a trend change here. It has started a good downtrend here, but I was I was expecting it to fall, continue falling, but something changed here. So where Jerome came, and you can see the trend has been now it changed. So yeah, here coming up next week, this week, if we see strong employment data, strong jobs data, especially in the leisure and hospitality sector, because that's where the hiring is strongest, you can expect this index to pick up, to continue going up and up, and well, I don't know how high it will go, but we will see as time goes. We will see. So of course, for the pairs, I'll trade. For the pairs, I'll trade is Euro USD. I prefer trading that pair in the stock markets. In the stock markets, the situation here is kind of different because usually, usually during this rate hike cycle, how it was in the beginning is that when the Fed said they're going to hike rates, the stock market would fall. When the economic data would come strong, the stock market would fall because it was an environment of where good news is bad news for the stocks. But currently, good news is good news. If the employment numbers come in strong, the stock market is going to pump up again. So here, I am not, the uptrend is kind of very strong. It is very strong, especially on the NASDAQ. So here we can only expect buys for a while. It's going to change. It's going to take something significant for the trend to reverse. Let's look at the daily time frame for this S&P 500. So yeah, you can see since October, no, no, it's since April, March. Since March, April here, after we had the short-term banking crisis at the start of the year, the market has been picking up, 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 up with only minor retracements here and there. This was another retracement, and then now the stock market picked up last week. So yeah, this uptrend is very strong because of incoming economic data that is also very strong. So your it's only natural to expect that even the incoming data we expect this week is going to be strong and it's going to send the stock market higher. So those are the two main ones. So this no, yeah, no, this is the euro dollar. So this is how it is. Huh. I had a setup. Let me look at it. Yeah, it's on FXCM. My internet is very slow today. So yeah, I had a setup here, and it was a QML. No, it's not loading. Yeah, it has got a QML. Okay, so this stop loss here, it was hit here on my trading view, but on the charts, um, I was not stopped out. I was still in. I caught these sells. This was my first take profit zone. I took some profits there on Friday before the PCE. The PCE came very bullish move here, and then now I'd say this is a new. I'd say this is a new, what do you call it? Higher low? No, 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 no. A new lower high. And then maybe price will continue the downtrend. It is very likely that it's going to continue falling. So that's something to look out for this week. This is what I have, and of course, looking at a smaller time frame like the hour time frame, M30, going to find more entries if there will be more entries to maybe catch the next price leg or to whichever direction, and then yeah, make money. So that's, as I have said when I was looking at the economic calendar, that's something to wait for on Friday. We are only going to trade on Friday. On from Monday to Thursday, you're going to look at the incoming data and how the incoming data affected the market. Don't worry, I'll release videos in between the week to explain what's happening and why it's happening, the effect it has on the market, and what that means and what you can expect come on the Friday, come on the main report, main jobs report on Friday. Let me stop there for today.